Hello, good day. You're watching Core Finance. I'm Charlie Gibson. Now, as you know, when we do a CEO interview, we like to do it for a CEO whose company's share price has been rising. And one such is Infrastrata. Their share price, well, you could have bought it a year ago for half where it is today, so you would have got about 100% uplift. And as the Americans say, I'll let you do the math. But today we are very delighted to be able to welcome to the studio Infrastrata's Chief Executive, John Wood. John, very good morning to you. Thank you very much indeed for joining us. And not only has your share price doubled, or depending on where you take the timing from, might have even more than doubled, but good news out today as well.
Absolutely, we obtained an offtake agreement from Vitol, heads of terms, so that's for 12 years, and really that's transformational news for us.
And is that all of your potential production, if I can put it that way, that you have offtake for, or what percentage?
Absolutely. I mean, we have 7 caverns, 500 MCM, and that's for all 7 caverns. So originally we were looking at the project to do 2 caverns, then an additional 5, but the Vitol deal has come in, taking all 7 caverns, so it's great news for us. So
whatever happens, you know that your revenue line, if you like, is pegged down at whatever level it is pegged down. Are there any subtleties, are there any pricing subtleties to this that we need to know about, or any volume subtleties?
Well, I think when you look at this, it's the first offtake agreement that's been signed, heads of terms, it's been signed in the past 10 years within the UK. So the gas market's really changing, and I think that's as a result of rough closing. So we've gone on the Q1, Q3 spread, we've gone in-day movement, and we've gone on Sumu events, which is like Beast for the East. So our pricing's made up of 3 different flexible areas. So whilst our base revenue's pinned, we've got potential upside as well, which when you get into the equity and the debt deals, it's great for us really.
It probably just worth for some of our viewers just stepping back a bit, and just because you're not your usual gas company, are you? So just explain what it is, how you differ, what, if you like, the business plan is.
Okay, what the business plan is, we store gas in underground gas storage caverns, 7 in total, about 1,500 metres in below Larn Loch. Now, what happens with the gas? It gets bought when the gas is cheap on the market, injected into the caverns, then it gets taken out again when the gas price is higher. So the gas is really, money's made out of the project by that changing gas price. Now, it becomes really significant when you look at the security supply for gas in Northern Ireland and the UK as a whole, because as you know, we were sort of 6 hours away from running out of gas when the Beast from the East hit, and the nearest cargo, LNG, was 6 days away. So we're really capitalising on that niche hole in the market, which was made even worse when Rough closed, taking away 75% of the UK gas storage market.
So is it possible, so you have these caverns, you buy gas, you put the gas into the caverns, and at a propitious moment, sort of market-wise, price-wise, otherwise, you then sell it. Within, you said there were those sort of 3 pricing, or 3 aspects to the pricing mechanism. Is it possible for you to make a loss, or the way it's constructed, are you basically always making a profit and it's just a matter of the size of the profit that you're making?
Well, one of the things we did was go back over the last 10 years and did some analysis to see if this deal was in place and the structure was in place, what would the numbers have looked like for the past 10 years. So over that past 10 years, the pricing that we came up with was really above our expectations, and there was no area over the whole term that gave us any concern, and it's always on the upside for us, so we're fairly comfortable with it.
Does that mean for each year you made a profit?
For each year we made a profit. Some years were lower than others. Obviously there was a couple of bad gas tradings like that. There was 1 or 2 years that were lower than we would have liked, but there were some other years that were substantially higher. So the average over that whole term was really good for us, you know.
Did you make a loss in any of the months in question? Is it possible to make a loss?
I think when you look at doing it, you really do it over the year,
right,
and look at the year, so you don't delve into the details of the actual months. But when you look at the revenue, it more than underpinned the debt that we're looking to take and given a substantial return on the equity.
So I suppose that brings me to the next question: is where do you go from here? You've got the offtake agreement for 100% of your output.
For sure.
So that underpins, if you like, the revenue for the did you say 10 years?
12 years.
12 years.
Yeah.
Next 12 years, that's now underpinned. So now is your moment, presumably, to go out to the markets and say, look, revenue's underpinned. What about some funding?
Well, we've actually been looking, been doing a lot of funding work, equity and debt over the past 6 months. We've had several work streams working together. So obviously by the time you take FID for this project, you need the debt, the equity, and you also need the construction strategy. So we've been doing work on that, we're doing work on the debt and equity. So we've got some options on the table that are fairly advanced. Since the news broke, we've had a few more other organisations looking to get in at this late stage. And again, we're having a quick look through, see what they are as we progress the negotiations through. So I think, yeah, really now that the construction costs are underpinned with the offtake agreement and the equity is underpinned by that, it's really pushing on full steam ahead, you know.
So we've got to, presumably with that underpinning that we were talking about, does that give you the opportunity to increase the debt component of the overall financing?
It's something that we've looked at to try and get that mix correct. A couple of the organisations that we're talking to, there's variances between the two. One's looking for more debt, one's looking for less debt. And I think we've run it back through the model to see what it'll look like. So I think we're fairly flexible at the moment on what structure we'll go for. But over the next few weeks, that will come out in the wash.
Can you tell me what you think? I mean, are we looking at 80-20 debt equity, that sort of figure, or 70-30, 50-50?
I think 60-40, 50-50, 60-40 in that kind of range. So let's see where we get to as those negotiations progress. We're sort of in the thick of that now, so time will tell. But I think the beauty about this, the whole deal is, for the Northern Irish economy, it's over 2 billion over the 40-year life of the project on the rates that we've negotiated for this first 12 years. So it's you know, good news. During the construction phase, there'll be 400 jobs in the construction phase, and then 60 jobs during the operational phase. So I think for the local economy, it's a big boost also.
Is 50-50, 60-40, is that quite conservative, given the fact you have this offtake?
It could be. I think when we've been looking through these work streams, we've been trying to keep realistic all the way through so that we don't end up in a position where perhaps if the offtake hadn't been as positive as we got, we still had an option. So now's the time to go back through when we've got those term sheets on the table and actually just go and tweak them to see if there's any more interesting stuff we can do with that, you know.
So it in a way, it reduces the story to a fairly simple cost of capital, return on capital.
Absolutely.
Sort of story. Can you tell us the figures, or is that...
I'm afraid we can't go into detail of that as much as I'd like to. I think we're at that stage in the negotiations that's fairly sensitive information.
All right, can you tell us, when you can tell us, what those numbers might be?
Absolutely.
So when do you think you might know that?
Well,
you might be able to release those to the public?
Look, we've already said we're still hoping to do FID this year. As soon as we can get that done, the better it is, because we can then get moved on to the construction phase. So, you know, later on this year, we hope that all be out in the wash. But in adjacent to this, we're looking at some additional projects. Another one is some gas storage in the UK on the mainland. So that gives some synergies between the two projects and would allow virtual trading between the two sites. And that really allows you a lot more flexibility in the volume as we move forward.
So what's the overall sum, the overall capital requirement that you're looking to raise over the next X months?
265 million is the total capex for the base project. Then you've got cushion gas that you'll add on top of that. So I think overall 300 million for the project. And I think you look at the return on investment on that, and it's within accepted parameters, you know.
And then in terms of milestones and in what time do you expect to raise that? When do you expect to start construction? How long is construction? When does it finish? What are we looking at in those terms? When's, if you like, first gas, first profit? Yeah,
I think we'll look at where we are now. This year we'll start enabling works already, which is increasing the access roads to the site and things like that. So that when we start construction, we're straight into construction activities. So that will run through from the end of this year through into 2022. We'll have the first injection of gas in 2022. Then we'll start operations 2023 in that gas year. So when you look at it relatively in comparison with other gas storage sites, it's a fairly tight time frame to get through, and we're fairly comfortable. We've done detailed feed. We had umpteen milestones that we achieved ahead of budget and ahead of time. So we've gone through and done that detailed work that really puts us in a good position when it comes to construction, because we know what we need to do when we need to do it, you know.
I suppose another way of sort of expressing all of this is that the offtake agreement reduces the risk associated with the company and the financing the project quite considerably.
Oh, absolutely. I mean, without an offtake agreement, whilst we've got the draft offtake agreement that we've signed, that moves on to a gas storage agreement. So we've spent a lot of time going into the detail of, it's not just a high-level document, it's fairly detailed so that we don't end up getting fallen over further down the line. We took a lot of time to get through that. What that really does is then allows you to proceed with a bit of confidence that all the hard work's been done there, and it really underpins that future equity. And I think that future equity is the thing that you need to protect the construction contract that you're going to be entering into, you know.
Now, I must ask you, gas, obviously a lot more popular than coal, and in Ireland, a lot more popular, certainly for the environmentalists, than turf.
For sure.
Still carbon, though, and it can't have escaped your notice that Mrs May came out with her announcement that we're looking to decarbonise by 2050, I think was the year, and it sounds like your project goes on beyond that date.
For sure.
So how does her announcement affect you? What contingencies do you have in place? What are you doing about it? How does it change the business plan?
Well, I think there's a couple of things here. The first thing is if you look at the National Grid 10-year statement, it's saying 30% of the energy supplies for the next 10 years is going to come from shale gas. And as we know, with the government's policy on shale, we're producing virtually zero shale gas. So we know there's a big gap in the market there, which will increase the volatility, which will improve our market conditions. But you also look at the rate of renewables that are coming online, and whilst there's a desire to be carbon neutral by 2050, I don't think it's a realistic target. I think it will be after that. I think the caverns as a backup can also store hydrogen, and one of the things we've been looking at in a little bit of depth over the last 9 months is how we get into the hydrogen area, and how we use the gas caverns for blending and storing hydrogen. So whilst gas is our primary focus, and we think over the 40-year life of the project they will store gas, there's also a backup. If hydrogen moves along a lot quicker, we can actually get into that hydrogen market.
Excellent. All right, John, thank you very much indeed.
Thank you.
Ladies and gentlemen, that was John Wood, the Chief Executive of Infrastrata, and we look forward to having him back in the studio in the months to come to nail down some of those last figures and just to find out how the project's going on. I'm afraid that's all we've got time for. This is me, Charlie Gibson, signing off for Core Finance. As I say, if you want to have a look at Infrastrata, it is one of those companies where the share price has gone up by 100% in the space of the last year, possibly more, depending on where you want to take your start date. We'll be bringing you more such investment opportunities in the very near future, but until then, you have a capital day.